Hello, this is Jordan, and this is your precious metals video market update. This is being recorded on the very late evening of Wednesday, August 19th, 2015. First, let's start off with a daily chart of gold. Now, we were talking about a couple weeks ago in our last video how gold was between the range of about 1080 to 1100, and if it broke below 1080 we could get a steep fall down to 1000, or if gold closed above 1100 then it could rally to 1140. Now, as we now know, gold has broken above 1100, and in today, Wednesday's action, had a very strong day. It's up about 17 bucks. Closed at 1133. It's already testing 1140 right now in Asia. We talked about 1140 to 1150 as targets before, and that's still a strong resistance. But this bounce, even from a bearish perspective, thinking that this bounce is going to lead to another sell-off, even from that perspective, gold could go as high as 1175. As you can see, they're looking at the chart. That is the next area of strong resistance after 1140 to 1150. There's also a confluence of Fibonacci retracements right around 1170. And in addition to that, you got the 200-day moving average at 1187, and that's falling. So that figures to get to come down closer to 1180 and in the 1170s. So again, to simplify, resistance at 1140 to 1150, but keep an eye on 1175, because that could possibly, I think the odds of that getting hit are higher than they were a couple weeks ago. Now, what we're looking at here is essentially gold against the foreign currency basket, and gold against commodities, and also we have gold against base metals, gold against energy. So, and we're also going to look at some other relationships in the next chart, but the real price of gold is, you're essentially looking at how's gold acting against foreign currencies, commodities, and equities, because as I've talked about many times, the real price of gold, gold against all those markets, that usually leads the US dollar price of gold at bottoms. It's happened many times. It's a leading indicator. And look, gold against foreign currencies, it has had a steep correction since that very high peak it had, I believe, in January, but it remains in an uptrend. It's not threatening the bottom that occurred at the very end of 2013. In addition, I mean, it appears to be holding the 400-day moving average for now. The moving average is sloping up. Again, when you're looking at moving averages, focus on the slope of the moving average. I mean, is it declining? Is it going sideways? Is it turning up? Because when a market shifts from bear to bull or bull to bear, the moving average goes sideways for a little bit, and then it goes the other way, as we saw that happen with the top link there, gold against the foreign currency basket. Now, moving on, gold against commodities, that's almost near an all-time high. I believe that high in early 2012 was an all-time high. Then it had a peak very close to that in January earlier this year, and now it looks like it's at a 4 or 5 month high. So gold is acting really strong against commodities. And breaking that down a little bit, you can see gold's trending higher against base metals and energy. I mean, using base metals as a proxy for some industrial costs for miners, that's something I like to look at. But also, more importantly, gold against energy. I mean, I could look at just gold against oil, but I put in the whole energy thing there. Gold against oil, it depends on the miner, but it can be up to 30% or 20% of the cost of mining. So these, gold's relative strength here against commodities, that's a really good sign. And also foreign currencies. I mean, that's a very good sign. The companies operating in Australia, Canada, Europe. I mean, there's not many in Europe, but those currencies are very weak, and so the companies operating in those places are obviously in much better shape as things are right now than the companies producing in the U.S. because of the very strong dollar. But anyway, let's get to the next chart, because what we really need to get out of looking at the real price of gold is, this is where gold needs to improve. This is what's lacking, is gold against equities. And from top to bottom, we're looking at weakest to strongest. So at the top we have gold against the New York Stock Exchange, the NYSE Composite. I like using that because it has over 2,000 equities in it. More than 4 times as big as the S&P 500. But I mean the chart is very, very similar. Then in the middle we have gold against the rest of the world, essentially the MS World Index. I believe that strips out the U.S. And then at the bottom we have gold against emerging markets. So we can see that gold against emerging markets, that's actually showing a lot of strength. And I actually looked at this, and today's close in that relationship was the second highest close in the past 15 months. So that's all, that could make a 52-week high tomorrow possibly. So that's a very good sign. Gold strengthening against emerging markets, and we can see gold is weakest against the U.S. Or the NYSE. I mean, gold against the rest of the world. I mean, that's still declining a little bit, but I mean, if you look at that ratio, and also gold against the NYSE, it's not going to take a lot for those ratios to break that downtrend. So, I mean, the shift in the relationship as far as gold against stocks, that could be sudden. Not to say it's going to happen in a day or two, but possibly that happens in a couple weeks or a month or two. I don't know if it's going to happen this month or next month, but gold is going to have to break out against equities in order for it's the coming bull market to really take off. The bull market is not going to take off before we see gold regain relative strength against equities. This chart is from the Bank of America Merrill Lynch Fund Manager Survey, which comes out monthly. Great information in this survey, great charts. And this chart shows gold, and it shows the net percentage of managers that think gold is fairly valued. So last month and right now, there's a very, very tiny percentage, a net percentage, that thinks gold is undervalued. So it's really low. We can almost say that they think gold is fairly valued. But the one takeaway I have from this chart is note that when gold was trading around 1,200 for the last couple years until the last month or two, note how many people still thought gold was overvalued. And with that breakdown below 1,100 to 1080, now we're seeing that people think it's basically fairly valued. They don't see it being overvalued anymore. So gold trading around 1,100 probably when the survey was done. If gold drops to 1,000, you have to think some of these managers would get interested in buying it. So I don't know how much we can take out of the survey, but those are my thoughts on it. I mean, it could be a sign of that there would be even more demand for gold around the $1,000 price. Here are the daily candlestick charts for GDXJ and GDX. Now the target for GDXJ is right around 23. I mean, perhaps it could reach 24. The 200-day moving average is at 24.60, and that's declining. So it's, I mean, it's possible it could go up to 24, maybe a little bit above. But that's what I'd look at there. And then for GDX, the target is 17. The 200-day moving average is at 18.76. It's also declining, but again, perhaps GDX could reach 18. So those are the levels that I'm looking at. There's still some gains left in the miners in the short term, I think, but you really don't need to rush in. This is a very volatile sector, and if gold tests 1,000, it could be, I shouldn't say it could be, it will be a fantastic buying opportunity in the miners. I mean, I think a couple weeks ago that was a fantastic buying opportunity, but we'll see what happens if gold tests 1,000. Maybe GDXJ is strong enough that it wouldn't make a new low. Maybe it makes a double bottom. So that's just something to keep in mind. I think miners relative to gold right now, it's really, really stretched, and so it really wouldn't surprise me if gold tested 1,000 and the miners held up okay. But certainly if gold is going to test 1,000, that would probably give you a buying opportunity in the miners. But how they're going to perform if gold starts another down leg, I mean, we have no idea. Obviously, we'll just wait and see and let the price action tell us. And we wanted to let you know that we're giving away our book for free. Go to thedailygold.com/book and opt in. Enter your email address to receive the book, and just follow the instructions, and you'll instantly receive an email with a download link for a PDF file and also an ebook file. The ebook file is nice to read. The PDF, you can print that out if you want. So there you go. And you can find out more about my work at thedailygold.com. And that's all for today. Thank you so much for listening and watching, and I wish you all the best.